Welcome to Monday's Market Outlook here at Top Gun Options. My name is Matthew Buckley. My call sign is Wiz, and I'm the Chief Option Strategist here at TGO. Coming to you from the newest Fortress of Solitude, the new TGO headquarters here at beautiful Icon on Los Olas Boulevard in Fort Lauderdale. Great, love it. Absolutely fired up to be set up and coming to you from here. Great views. If you're ever down here in Miami, Fort Lauderdale, Palm Beach, give me a call. We'll go out and we'll break some stuff. So let's get airborne. Kind of a mixed they all seem like big weeks, folks, from potential nuclear war to all sorts of stuff. But this week, the ECB, and here comes the T word, that the ECB is probably about a year to 2 years behind us. What do I mean by that? Anybody remember, Ben Bernanke, the old Fed chief, and the taper, right? Tapering the $85 billion a month. Remember, the Fed got involved in capitalism. I was completely against it. I was in the board of trade when the market imploded in 2008. The VIX hit 80, 90. I said, let it burn. The Lehman Brothers, the Bear Stearns, hey man, from the ashes will rise a phoenix, or phoenixes, or phenai. The point being is they got involved in capitalism to the point of $85 billion a month in liquidity. You could not keep this market down, folks. It was like the Pope to Catholics saying hell didn't exist, man. It placed a Fed put under the market, and we just kept going up. What happened when Bernanke said last call and started to take away the punch bowl? Well, the market drunks started to freak out. They had what I called taper tantrums. Remember? Ben would come out and say, we're going to, instead of $85 billion this month, we're only going to do 65. Market would go apeshit for a day or two and then get back on their horse and start going higher. So it'll be interesting to see what Mario does this week with the ECB and his potential taper. Could ripple across the pond, not quite sure. We also have Q3 GDP on Friday. Remember, GDP comes out in three parts: advanced, preliminary, and final. So obviously, I'm no rocket surgeon, but advanced is the earliest, so it has the most impact. Let's take a look at the forecast. Remember, the last quarter forecast was revised up from 2.6 to 3.1. This was a blistering GDP. This was a tweet storm out of the president. Huge, huge GDP. Look at the implosion we're expecting. Why would GDP take such a hit last quarter? I can mentally hear the thousands of people that watch this video answering mentally what? Hurricanes. I went through one of them down here, folks. Irma. We had Irma and Harvey level some parts of Texas air, and level, I mean, for a week, some, most, was it 2.3 million Floridians were without power here at TGO. So, of course, that's going to take a hit to GDP. If it comes in anywhere north of 2.7, I think it's a very bullish indicator. But remember, this is a one-off. Two hurricanes, back-to-back is obviously going to kick you in the gut a little bit here. So, and core durable goods, I think it's on Wednesday. But good headline out of the journal, ECB taper promises to set off ripples across many markets. You bet it. You bet it will. So we'll see if it really ripples across the pond. Here we go, folks. Here it comes. The longest streak ever without a correction in U.S. history. We just got done a weekly options live trade brief at 1 o'clock. We put on an SPX bull put spread that could potentially make $1,500 by Friday if the S&P 500 finishes above the 2565. Let's go SPX. There's a reason we put it right there. This little gap up that we saw, this nice little rally here. Folks, the webinar the free webinar I did last Thursday was called Smoking the Hopium, Trading the Trump Rally. This just goes higher. Now this is momentum. It's not, earnings haven't been bad. We'll get tech earnings this week. The underlying macro data isn't exactly bad, but it's kind of like Goldilocks. It's not super awesome and it doesn't super suck. So in the absence of a global thermonuclear war with North Korea, this market's going higher. So it's time to smoke the hopium and go higher. The trend's your friend, man. And you have to trade the market you have, not the one you want. Not that I want a down market. I mean, as an options trader, I really don't care. We can potentially make money whether it's going up, down, or sideways. But the market that I want is one that truly reflects what's going on underneath. Now, some of you Dow theorists just got really in an uproar right there, like, well, Wiz, all based on price discovery, the market's exactly priced at where it should be. Okay. So with the market kind of doing this and the VIX down here still plumbing the 9 and 10 range, look at this. Look at this extended, let me give you the 6-month VIX here, volatility index. Something has happened every month to freak the market the hell out and then calm down, except for the past almost 2 months. Look at this period of, look at even in here, freak the market the hell out. Little freak out, little freak out, little freak out, freaked out. Look at this. Barely any freakouts in here, folks. I covered this last week. There's low volume in this market and there's low volatility. That's running around a forest where it hasn't rained in years with a signal flare, man. Anything can set this off. So I got a bull put spread on, a weekly trade out to Friday, but guess what? The Fred Sanford's coming, guys. It's the big one, Elizabeth, right? It's coming. It might be this. Mnuchin last week said, hey, pass tax bill or the markets are going to tank. Now, a lot of people on Comedy Central, what I call CNBC, are like, die, smoking crack. And are you kidding me? There's the Jim Comey pullback. There's a Fire and Fury pullback. There's the Trump's a racist and Mnuchin and Cohn should resign. Every pullback this year has been political. We haven't had some real big political stupidity except for some asshat congresswomen and a Gold Star family issue I don't even want to talk about. But look at this. You tell me this rally right here, we're going to just keep going higher if Mnuchin's in the Rose Garden with the president going, couldn't get tax reform passed. You think the market's going to rally on that news? You're an idiot. Got a lot of buddies who appear on CNBC, and I say it to their face. That's the dumbest thing I've heard. Tax reform is baked into this rally, and if we don't get it, it's going to be bad. When the Treasury Secretary, this guy used to run, he was a partner of my sister's at Dune Capital. I was at a dinner with this guy. My sister, I'm the underachiever of the family. My sister got Woman of the Year one year for New York City. You can Google her name, Kia Buckley, CIA. Her first name's Cornelia, but we couldn't pronounce that growing up, so it was shortened to Kia. But she was a partner at Dune Capital with him. So when the Treasury Secretary of the U.S. says, hey, if you don't pass tax reform, the market's going to tank, take the guy at his word. I mean, he's not an idiot. So keep an eye, one eye. My strategic mindset right now, as I remind you, is cautiously bullish, and cautiously is a huge word in bold, italics, and underline. So we have our hedges on, and the trades that we do are all spread, so they're all in and of themselves hedged, but. Again, I drive down here from Boca when I see my kids, and I come down here and I pull off the exit ramp to get on Broward and head west, and there's the guy with the end is near sign with his tinfoil hat. He's going to be right eventually, and so am I. Real quick, tomorrow night, folks, for my members, I'm not going to do full throttle training at 7. I have an Analyze Your Trade session tomorrow night over at Timing Research. So make sure you register to attend that. And you can come even if you're not a TGO member. Obviously, go to our Facebook page and scroll down to where these 2 F5s are flying formation and click on this link, and you can register for the 9 p.m. Analyze Your Trade session tomorrow night. And do me a favor, make sure you stop by at the top of the TGO page and read this fake news on the Huffington Post article about me. I thought that was comical. Never thought I'd be in the Huffington Post, at least for anything that was complimentary. And they actually reached out to me. A different column on the Huffington Post wanted to do an article. So, all right, guys, I got to run. I got to send out my replay email from Weekly Options. So I'll see you tomorrow for Tuesday's Market Sit Rep, and I'll see a lot of my members tomorrow morning at 10 a.m. for the primary live trade brief. Have a great rest of your day. Happy hunting. Make sure you hedge, and God bless.